Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are on Friday, the 14th of October, 2011, time about 2:20 in the afternoon. Gold market's going to finish up right in this general area. It's where the market was at about 1:30 Eastern time, around the 1682 level. Let me tell you before I get into the charts something that I'm noticing going on. There is a shift in mentality taking place in the markets, and that shift is positive. If the Greek situation can be contained, and there's going to be a lot of pressure this week by the G20 to get it done. Then there's meetings coming up where Greece has to be given another tranche of money. The demands on them are going to be great, and the Greek people should take it, whatever those demands are, write down the debt. What you need to see for gold to add another level, in my opinion, is to see a haircut on this Greek debt approach 50%. 20% is just kicking that can down the road. Yeah, you've given them a little break, but they can't service everything. You've got to do more. The funds that are necessary to be put up to recapitalize the banks in Europe, do it. Get it behind you and get a kickstart, because it'll kickstart the whole world. Everybody's looking for something positive, and you're seeing it in the stock market. It's gone up in the Dow, 14% or so in about a week. My percentage is off. Doesn't matter. It's not off by much. And the gold market has come back $150 off its low. What gold is looking for, in my opinion, is the next thought process, and that's the inflation process, because economies around the world aren't as bad off as we thought they might have been. You're already seeing some of the key numbers in China look better. The inflation numbers aren't as great. That's important to look at. So it's the glass half full, not half empty thinking that is going on. And in the gold market, you see that. Now, if the stock market corrects because it's gone up this dramatic amount, I would expect gold's going to set back a little bit. On the other hand, if the stock markets, and if you watch my stock tape, my financial tape, you'll see what I'm talking about, break out of that top of the trading range, that could be the liftoff point for the gold to carry it to the next plateau. And let me explain that thinking about plateaus. This was a price area that the market started working within. I don't think you'd disagree. The 1900 level, we hit it in 1914, 1923. We pulled back into this 1800 level, and it gave ground. Now the market's pulled down to 1535, and it's pulled up into the 1690s, and it's looking to see what next. If it can hang here, the old area it worked from becomes the next resistance point, and that starts in, let's call it the 1760 level, the spike of that area right in through here. That's what I'd be looking for. In terms of the swing lines, the market has been working higher, but if you want to know where the momentum will be lost, keyword lost, if you take out 1654.30, I had this circle, that circle would be moved there if I had to redo the chart right this minute. That's the number. What about launching to the upside? If you can take out the 1693 level and close over 1700, just like a magic number, I think you get to the next level of resistance. Now, what about the support? I think the support's going to find itself at 1659.20. And if you get through that 1654.30, I'm fearful you're going to come back down into the 1600 level. So I think we're at a very important price level. I think the market's biding time, looking over its shoulder each way. Where's everything else going? If everything's getting better, why am I so cheap when I was up here before? Something you've got to think about. You can see this old level. The 45-day average of closes is the only moving average above the market that I think offers any resistance. The 18 and the 100-day, well, they're converging in the 1650s right now, and the key is going to be, can the 18-day get under and back over, start its slope back up? It's got an awful lot of days worth of data here that gives it reason to say, yes, maybe that can be the case that happens. But to get short here, it's pretty hard against the 18-day average and the 100. The Bollinger Bands are swinging down, and I started talking about this to you at the beginning of the week. I said they're not going to stay there. They're going to narrow in, and they've been doing that. And they're going to get to a more normal type of pattern, in my opinion, like they were here. And that is part of this building a price plateau. When plateaus are built, it's not uncommon for the Bollinger Band to develop a different slope than you're seeing here and go back to a more normal slope. In a bull trend, you can see that the slope was pointing upward, but it never got as bad as this one that turned down, and that's because in markets that get the public all involved. And if you think about it, when gold was 1900, everybody, that's all you heard, everybody should have gold in their portfolio and blah, blah, blah. And the news and airwaves were full of buy gold from me, do this, do that. Come on, you know what was going on. Reminded me, and I wrote in my report, I said, this is reminds me of the real estate game. And it was, I'd go and I'd get grooming, and everybody I knew, from the manicurist to the hairstylist, oh, what about the real estate? I've got property, I'm making a fortune. I'm buying gold, I'm making a fortune. Nothing goes in a straight line. And that was that thinking. Now you're back into the old chugging and moving higher. And if the inflation scenario grabs hold eventually because things get better in the economy, that's a much better story now for gold than what you had here. The dilemma for the gold is it's getting overbought. So to me, this is a problematic area, and I'm thinking the 1750s is about the best you can look for right now, and I don't know if it's capable of getting there. You're liable to get another correction, and as you saw, I had drawn you support lines before in the 1560 area, and I've been telling you that I've been thinking 1621, the close of July, has been a very important area, and I think that that's proven to be accurate so far. Forget what this chart is. I just want you to look. This was a Bollinger Band. Look at how the crazy slope of it went. Doesn't stay like that. So this is another market going sideways. You know what market that is? Silver. Just going sideways. Not ready to go anywhere. Guess which other market's like that? Copper. This market's building another base. These things get exciting over time, but I don't know that they're there yet. Copper's a barometer for the world. A world. It's better than gold, better than silver, giving you an idea of how the world manufacturing and construction business is going. Everything uses copper that you build. So this market at $3 was too cheap, and it's now looking like it's finding a better plateau, but I don't know that it's just ready to pick up and go because it's used a lot of energy to get up here. The momentum of the market, yes, it's up, but you're starting to enter an overbought area. This is the sugar market. Did I not say, and go back to my videos just recently, I said you're going to get a major move out of the sugar. This looks like a big bottom. You've broken out to the upside. It's too late if you're not in it. You don't buy over a Bollinger Band, and you don't buy over that stochastic reading of 80. You wait. You'll have an opportunity sooner or later. But you don't need me to give you my opinion. Take a look at what happened. So you're back into this old resistance zone. This isn't where I think you go chasing the market, but it's something you watch. Here's another market, cocoa. You know, I thought cocoa was going to fail today. I was looking for it to actually go down, not up. Market gets over 26.90. I don't expect it to go very far on the upside, 27.30, because of the Bollinger Bands coming in here. But it is base building. And I thought maybe there'd be another challenge of this lower band at 25.68. I don't know that that's going to happen now, so it's a market that I'm studying pretty carefully. Here's a market that is also in a base area. This is a new plateau of prices. Let's call it the $88 area down to $75. And while you may think, oh, the market's just going to pick up and run, it was just at $76 a week and a half ago. So you want to pay $87 for it now? Be my guest. I don't think I'd go chasing a market that is overbought, not with an embedded stochastic, and 88.50 is the next Bollinger top. Now, I think that this market might bear some watching, serious watching, but not a market that I'd have you go chasing after. The same things of the euro. You're going into these important meetings. This market's no longer at 132. It's now at 138.90. You got to be very careful. This is not a market I think you go chasing after. Now, if it wants to burst out of the Bollinger Bands, you'll change the slope. But playing for that, that's only 2.5% of the time. It's not the best bet that you can make. Stock market. Notice how it's picking up second part of the day. You take a look where this Dow is in comparison to where the market was going back to August. You're going to be surprised. Quietly, it has crept up. I had a good friend I was talking to today, and he goes, that market hasn't come back. It was just down 20%. And I said, really? He said, you haven't been paying attention. And that's what I'm noticing. People haven't paid attention to the glasses half full psychology that has been coming into the market. What we don't want to see is the G20 go wrong. We don't want to see the Greek issue handled improperly. Shock and awe. That's what we want to see them do. You've heard that term before. Go after Greece that way. Contain the problem. Now they have their opportunity, and I think we have a whole different world we start looking at. With that, I'm Ira Epstein. We hope to hear from